All right, hey everybody, we're live. I'm Shane, and this is my partner Richard, and we are the Rogue Traders here for Gravity, grvt.io. And this is our little weekly show where we talk crap and our positions and our philosophy and everything else, mostly about Bitcoin, but we talked some other altcoins as well. Well, we had quite a week. From our last show. We had a big drop. We'll share the charts in a bit. But there was a lot of drama, and not just in Bitcoin. Bitcoin was just following the traditional markets. There were some big moves in the traditional markets, down and then up, and Bitcoin basically just more or less reflected that. And in fact, we do a lot of trading on the trad markets, futures, and stocks and different things. And in fact, if you want to follow us, you can check out on Twitter at Rogue Options. And I've started posting some of our trades in there, and you can see what type of trades. And in fact, there's a good trade there. It was made over 200K on that trade, so that was a really nice one. That was the Bitcoin futures on the CME. That's BRR, and there's another trade in there, the stock symbol LAES, and that's one of those AI.
Not to mention my awesome 100%. Gain in 20 minutes on AMD.
That's right, your AMD trade. I forgot about that. So, hey, if anybody's interested in exploring outside the crypto world, check us out. And we're going to be launching a subscription service soon, where you can join us live every day, all day trading, and become degenerate just like we are. All right, so let's get on with Bitcoin here. Let me share the screen.
I think I ought to.
Oh, hang on. I am sharing the screen.
Yeah,
I thought we were on the camera. It doesn't matter.
There's no rules here.
There's no rules, no.
So we should address the fact that I famously said that there is no way you're going to get filled at 88K on last week's broadcast, and then suddenly the market dumped down to 81.
Yeah, same day. So this is our last broadcast right here where I'm showing you the screen. And of course, later that day, we crapple and right down to 85 or something.
Yeah.
And of course, that was on the NVIDIA news.
Yeah, so it's becoming mainstream knowledge now that NVIDIA is a massive Ponzi scheme, and in fact, so there was a big rotation out of NVIDIA and into other stuff. Google, Warren Buffett,
Google was a big one.
Google, and then so that caused a whole lot of confusion and rotation in the trad markets, which sent shockwaves through all markets because these Mag 7 stocks were just way too big. So and Bitcoin was very nervous, and people just pulled their bids, and then we went.
And there's some aggressive selling too. Some Bitcoin wallets which had been dormant for a long time sold. And others are accumulating.
Yeah, and I think I touched on this last time. There's been this big trade where people have been long Bitcoin or Bitcoin derivatives and short MicroStrategy, and they've been selling down the MNAV, and that got to the stage where that MNAV hit a bottom. So actually, MicroStrategy, depending on how you account for it, now trades at a discount to Bitcoin, to the Bitcoin it owns. So that those trades had to be unwound, which essentially means selling Bitcoin stopped being short MicroStrategy. And I think there was lots of FUD in the press about MicroStrategy over the past month. And I have a feeling that was deliberately placed in order to suppress the MicroStrategy price, to spook investors, to keep MicroStrategy down while they were buying back their shorts and selling Bitcoin.
And just for clarity, FUD is fear, uncertainty, and doubt. It almost feels like the MicroStrategy Bitcoin trade was a bit of a steady gold mine. It was kind of like the yen carry trade, a mini version of it. And when it unwinds.
Yeah, MicroStrategy was trading at 2.5 times the price of the Bitcoin inside it, and so you could, if you didn't believe in Saylor, and let's face it, most sensible people don't, then you just sell the stock and buy the Bitcoin, and you win, guaranteed win.
Oh, I saw a news article yesterday or the day before that Texas is the first state to add Bitcoin treasury, and they bought 5 million. I think it's 87,000.
Okay. Yeah, good trade. So, just to finish off, so I said last week that I was going to go 2x long.
That's right.
It's about 91-ish.
Yeah, right around here.
So I quickly undid that trade as we were dropped because I was wrong. And then as we hit the bottom...
down here?
Yeah, well, I actually... sold $80,000 puts when we were right at the bottom to pick up maximum.
Nice.
So that was that was a lucky trade.
Did you do it as a risk reversal, or you just sold the puts?
I just sold a put spread actually. I sold
Nice.
80k, 75k put spread, and then just because I wanted to test the waters for the bottom rather than going long futures, and then. When we got to about 83, I started to feel a bit more confident and started pounding in to on the up. So I've been long all this recovery, and I was short sort of for about a quarter of the drop. So I've made money, but it's a bit scary.
It is, and when it was coming down here, for any of you people who trade options, the skew was so massively skewed to the downside. There was so much premium there. I think we're up to about 60% vol or something, if I'm not.
60 vol and 22% skew. So they were classic signs of peak stress. In
terms of the gravity account, I've been trading this account very lightly. I'm actually going to start to get more aggressive, and so I want to talk about this. So I hope that if you got hurt, you weren't hurt too bad. There was a lot of people got wiped out in here. That was a big move. Let's not beat bones about it. From where we're talking, it went down, 12-13%.
Epic.
in total, fast, right? And nobody knew what was going on. It was 70 the bottom, was 50, was 85 the bottom. Nobody knew, right? Yeah. And a lot of times when this happens, people just want to wait, sit it out, and wait until it kind of finds its legs and then get in. And you need some sideways action. Right. To know when that is. Is it here? Is it here? You don't know. And then this happens, like, okay, that's a little bit more stability. Either you think, hey, it's going to go back down, and you're right or wrong, or it's going to go back up. And a lot of times it's way, just like with an earnings play. A stock is an earnings play. A lot of people won't touch it the day of their earnings. They wait till the day after, even sometimes 2 days after, because there's some sort of rebalancing. All the shock is gone, and people kind of say, hang on, okay, I think it was overdone this way or that way, and let's get back to some form of balance. So I did have some bids down here long. I flipped them to short. And I actually got whipped out, and nothing big, all small. I actually lost on quite a few of those trades, longs and shorts in here, just because the rebound move was so big it triggered me out, because I wasn't committing to anything. I wasn't committing a lot of money. I was like, okay, let's test the waters. Now, once it started to go sideways here, well, now this is my game. I like that. So I was buying, selling, buying. And then up here, I think I sold at about 88 or 88.5, 89. And then it went up even more. Great, but we don't have a position right now in gravity. But now that it's done this, if it comes back down here, I have a lot of confidence to buy it. If it goes to mid to high 80s, 86, 87, 88, I'm soaking it up. I'm soaking it up all the way down to low 80s probably, just because clearly, this is a capitulation wick down here to 81 or whatever it did. But the real sort of bottom was sort of 82-ish, and it got rejected. It got rejected hard. Buyers stepped in. That's the price the market determined. Auction. There's a lot of whales doing stuff. We know there's a lot of people accumulating down here. Yeah. There's a lot of media coming out saying, "Oh, this is the chance of a lifetime." Other people saying, "No, it's going to 25,000."
Well, it was
as always, right?
It was when I started reading on Twitter that it was going to go to 55. That's when I knew the bottom was in.
Yeah, that's right. Yeah. I used to, when I was a really young guy before I started prop trading, I used to work at a bank in the brokerage, and I remember and back that was before the internet. Right? Well, the internet was there, but it was not. Online trading was there, but it was clunky. It wasn't very good. We were still taking orders over the phone, right? So I'd be trading on the phone, and we'd get guys come into the office. This is just like as the .com bubble was ramping up, so like maybe 1998, right? And we get guys coming in with skateboards saying, "Hey man, I want to buy some stock." You knew the top was near, right? You knew the top was near. And you've actually got a similar strategy when you're traveling with taxi drivers.
Yeah. If taxi drivers start talking to me about their crypto or stock portfolios, I know the top's in.
Well, because everything filters down, right? It filters down, and it's not a disparaging thing to say. It's just the truth.
No, it's funny because in 2021 I was traveling in taxis a lot, and literally every journey, I'd have a massive. I'd let them. They'd ask what I did, and I'd say, "Oh, well, I work for an exchange," and then they'd be all over it, and they asking me what to buy, and and asking me what to put their life savings into.
Oh my gosh! Oh my gosh! Yeah. Well, here's the funny thing is, so last week we're right around 91, 92, and look, this week, 1 week, after all this drama, all this pain, all this, we're right back to the same damn price.
Isn't that? Yeah, I mean, mean reversion is the most powerful force in the universe, right? Not that you can't get killed in the meantime, but
if you have some patience and you're not over leveraged,
it's all about the leverage. Yeah, yeah. So, and over the past 2 days, what's been interesting? We've seen this quite big ramp up over the past 2 days, but it's actually, I think, quite weak. Oddly, I think it's a bit of a
paper rally here.
I think it is. And the reason I think so is that I haven't seen much ETF buying on in Bitcoin.
The inflows are positive, but they're not strong.
Past 2 days they're really weak, but they're positive slightly compared to massive outflows last week. And the rally in the S&P and the Russell 2000 yesterday and the day before is unusual, to say the least. It feels like it's if you go onto CNBC, they'll tell you that this is by no means a short cover rally. Our view is it's absolutely a short cover rally. So
it seems massively overdone.
Yeah,
and these things can run forever, but we had so many positive days on really nothing. Yeah. So I wouldn't be surprised to see the market pull back.
Well, I think there's been a bit of fight. Oh no, sell Nvidia, buy Google. Oh, wait a minute, maybe not sell Nvidia, buy Google and cover the shorts. And I think there's been a bit of that going on, right? So yeah, and then of course it's a Thanksgiving weekend in the US. So the US is closed today. It's half a day tomorrow. Historically, prices go up, I think, on Thanksgiving Day.
I don't know.
I think so. But and I think December is normally an up month, but
year end, yeah.
But we have a funny world because we've got jihadists shooting up cops outside the White House.
Was it?
Yeah, he shouted Allah Akbar. Yeah.
Oh, jeez. Yeah, National Guardsman got shot. Yeah. Boy, oh boy, oh boy.
We've got the US about to invade or bomb Venezuela.
That's escalating. Yeah, yeah.
It's a funny thing about the US. I keep wondering, why is it they cannot bring themselves just to pay for oil? Have to go and annihilate a country to get it.
Yeah. Well, even the China-Japan rhetoric really caught me off guard. How quickly that escalated, and I just didn't understand why. It didn't seem like that big of a deal, but then again, I don't know.
Well, there's a huge amount of history between China and Japan, which so it's a bit of a powder keg. Yeah.
Chinese never seem to forget stuff, do they? They kind of hold that grudge. They've got thousands of years of unbroken history there. All right, so here we are. We're right back to where we started from. And in fact, yesterday we sold some call spreads in between sort of 96 and 100 for, I think, the 12th of December and the end of December. Quite happy with that. We've been long this run up in some other accounts. Do you want to give the people an idea of, you trade a hedge fund.
Yeah.
What type of volume you do on a daily, monthly basis in Bitcoin, just Bitcoin?
Monthly basis, we're trading about 3 billion of futures, of notional.
3 billion worth of futures, yeah.
And probably about, $500 million of options.
Yeah. So, we're trading heavily. So we kind of know what's going on, but we'll still get caught off guard. So this move down here, it was a news play.
Yeah.
What are you going to do, right? It could go up, it could go down.
Yeah.
Same with trading a stock, anything. Sometimes those things are going to happen. You just have to, again, not be over leveraged.
Yeah.
And, realize your limits where you're going to take a loss or flip your position. And when it starts to get crazy like this, sometimes it's better just to sit on your hands versus, I think I'll try and catch the bottom here. Oh, that's not it. I'll try and catch the bottom here. Oh, geez. And this was the bottom, but you didn't get in because you got hammered 3 times.
Yeah.
We've all been there. Sometimes it's best, wait until it settles out. Then take.
And also, never believe the first bounce. I have this sort of mental model that everything takes 3 days to play out, and so you must never rush to be into a trade to try and catch a bounce. And the reason I think it takes 3 days is that on day one the first drop happens, and on day two the rich people who are playing golf read that in the newspaper in the morning. and then they call and they play their round of golf, and they have their drinks, and then they call their broker, and say to the broker, what about this whole thing? And then the broker says, well, it's all looking a bit weak, and they, well, maybe tomorrow sell some of this and buy some of that. And I think that whole process takes about three days for rich people.
And that's the way it's been for a long time.
Forever,
I know young people are like, hang on, people have brokers and they call them on the phone? Like, but it's true.
Proper rich people don't use computers and stuff like that, and trading apps. They just have people to do that shit for them. So I think if you do see a sell-off, I wouldn't buy it until 3 days later. That's my kind of rule of thumb. So.
Now, if you can get in early. Just don't expect you're going to catch the bottom. It might go further against you. And if you're scaling in, you're like, I'll buy a little bit here, I'll buy a little bit here, a little bit here, a little bit here, a little bit. And I had ordered down here. Fine. You have to make sure you're not going to kill yourself doing it. Fine. I think that's okay. So right now, I think we're probably a little bit overdone. Maybe we'll have one little last push up. Maybe we go to 93 or 94. But I think that'd be it, personally. Again, anything can happen. Maybe we'll shoot up to 100K. I sort of doubt it. But I'd be more inclined to think we'll have a little bit of a pullback, even if it's just to 89 or something. I think that's very, very likely. So I'm a buyer. If it comes down here, I'm going to be absorbing it. If it goes up extreme, I'll probably end up shorting it. I'll have some call options. We'll have to roll some short call options. We'll have to roll. But I think that and we could bounce sideways for a while. And the only reason I think we'll bounce sideways from here, or we could, is because we're going into a weekend.
Yeah.
Now, I do expect tomorrow's trading session to be pretty active. So I don't think it's going to stay here unless the trading session's flat. But why don't we take a look at the liquidation heat map, just kind of see where our max pain is and all that good stuff. And let me that's a bright screen, eh?
Yeah.
So 24 hours away.
Ooh. Yeah, be careful on the downside.
A lot of liquidity all the way down to 88,000.
Yeah.
So if I'm going to buy a pullback, I'd probably like to be around 88,000. Just thinking that if they're going to punch all this liquidity through 88 and 90, I don't know if you can see these numbers very well, that's where they'd be hunting liquidity. Maybe even as low as these 86, 87s.
Yeah, it could easily wick back down there.
Yeah. So I'm happy to start buying down here, and mid 80s. I'll be loading the boat. Gets down to 84 or something crazy, I'll be long.
What's it looking at a week?
Let's take a look at 1 week. So, that's just a 24-hour chart.
Because that covers what we did. Interesting.
83 is sort of this liquidity level down here. So
100 million there. Yeah. Okay, so actually, anything that happens in the up and down the next $4,000 is just noise. Yeah.
And look, 1 month out, it's all to the upside.
Interesting.
All to the upside. Not to say they won't take out this bit of liquidity down here just to load the boat and flush a few more people out before they take another run. That's completely possible, right?
I think I think 105 by year end is probably possible. I think
could be.
And there's definitely a target there at 111 and a bit.
Yes, because if we look at the max pain, so here's the what is this 1205? Okay, this is tomorrow.
That's
the 28th. I see it's 29th, 30th.
Yeah,
so here's the end of the month. Well, it's got the biggest open interest.
100K.
100K, and I think it's been there for a while. So that's the max pain in terms of options.
It's come down. It was like 105, so it's dragging down.
Yeah.
So people are. So what's happening there is people are going to. They've seen their 120 calls go to more or less worthless. They've bought all those back if they're short calls, and then they've thought, well, where else can I get some value? I know I'll sell calls at 100K.
Yeah, they could have rolled them down.
Right.
Yeah.
And that's. I mean, people do it a lot, and I do it sometimes too. But it's a terrible thing to do, rolling your calls down as a market drops, because you just know on the bounce you're going to get hosed. But
I'd rather close them off, buy them back, wait for the market to bounce, and then sell them again. We get some better value.
I'm trading MicroStrategy in my one of my trad books, and MicroStrategy sold down from like 190 to 170 ish, and I bought a load of calls back because I'm massively short calls on MicroStrategy because it's a great way to earn income.
Yeah, high volatility.
Yeah, and you can oversell calls against the stock and pull in loads of premium. But actually, when it wicked down there, I bought them back. I paid $1 to get them back, and I then waited. I just thought I'm not going to. I daren't chase this down, right? Because it could jump $30 in a day. So
Sure. Yeah. Mean reversion, as you said, it can be a powerful tool. Do you want to take a look at the
okay.
at the risk reversals?
Reversals. Well, so a common area I look at is the 1 week 10 delta risk reversals. Now, so last week, I think I was commenting that they had gone from minus 17% to minus 21%, and then back. And then I think at the very bottom of the drop, is that
Was
5
around,
days?
when it was around 81,000 there.
Where's the? It's only 5 days. Sorry. Okay. Yeah. So the very bottom of the drop.
Isn't that it there?
There. Yeah.
Yeah. Because the blue line's Bitcoin, right?
Sorry, the blue line's Bitcoin here, and then
Yeah.
these orange lines are implied volatility of options. You can see how implied volatility is a measure of fear, and you can see how the fear spiked. So as the market hit bottom, this value here, this 10 delta risk reversal was minus 22%, which is
extraordinary.
and this was at the money forward was about 60%. To me, in the current market, that screams max fear, max. So people scrambling to buy puts at any price to protect their book, no matter what. And that's a guaranteed way to lose money, because you're buying at peak fear and you're paying max prices for puts that are now going to become worthless. Now, sure enough, the 10 delta risk reversal is not flat, but minus 6% is kind of normal. So that's like saying, well, we fear the downside more than we fear the upside, so we're going to buy more puts than we are going to buy calls, right? So we're prepared to pay a bit more premium for puts, because that will protect us if the market does dump another 10-15%. So, but this volatility surface, and I appreciate to the uninitiated, it's a huge complex matrix of numbers. But to me, this is saying actually situation normal. Market's completely back to normal. No one feels any fear.
Yeah.
No one feels any abnormal fear.
One thing I will mention is the FAG index, which is the fear and greed index, is extremely low. It was in the teens all week, which is basically a lot of fear. But the market just kept going up and up and up, and that's a very unusual situation. Usually when the market goes up, everybody's feeling, hey, everything's great.
Yeah.
Very strange situation. And that's why we don't think this is we think this is a rally that should probably be shorted.
Probably,
in the trad markets.
Yeah.
The other thing I'll mention too is, so we saw this huge down move and this big spike in volatility. That's even if you're just trading futures. Okay, you're on Gravity, you're trading futures, you're not trading options. You can use this data that options provides us to help your trading. Basically, this is capitulation. So you're watching the price action, thinking, geez, this is pretty crazy. Wham! And you see that spike in volatility, which means everybody's panicking.
Yeah.
That's the time to buy.
Yeah.
Who dares wins, and it's always the same pattern. Like Buffett, buy when there's blood in the streets, and blah blah blah. Or, all these guys, it's been the rule for hundreds of years.
Yeah.
And it's no different now. But you've got to make sure you're not over leveraged and do what you can afford. If you want to go crazy, if you're one of those crazy Korean gamers, then go in hard. But that's when you go in hard. You kind of wait until everybody's just tapping out. They can't take it anymore. That's when you get in, if you can time that right.
And actually, it's a very emotionally difficult thing to do if you to wait for the absolute bottom, because everyone fears missing out on a good thing.
Yeah.
And I don't know about you. When I was young and I used to receive my pay, the money used to burn a hole in my pocket, and I used to be.
You're still young.
Well, when I was young and stupid, and I found it very hard to. In fact, I didn't even think of saving money, because the money just represented opportunity to have stuff.
Yeah.
And I think it's a very primeval, acquisitive instinct. And so we see prices are going down, and we feel, okay, great, we should take advantage of this. We should be first. We should get in there and get all the nuts before the other squirrels get the nuts. But actually, markets don't work that way. There is this 3-day lag, as I mentioned, and there is this markets tend to overshoot, and you've got to resist the urge to get in. You've got to wait till everybody else actually is being killed, and then wait. and then get in once the battlefield is calm.
Yeah. Well, there's the 3 L's that kill a young man, right?
Liquor, ladies,
And
leverage. Yes.
leverage, yeah. And the thing is you don't know when the market bottom is, right?
Yeah.
When it was down at 81, how do we know? It could have went to 75, could have went to 70.
Yeah.
But this gave us a clue that, it was extraordinary divergence.
Yeah.
That, okay, this is out of the ordinary. And there's a good chance, I'm willing to bet that this is the bottom or close to it. Maybe it's going to go a little bit against you. Okay, you got to be prepared to be underwater on any trade.
Yeah. Yeah, and of course it's very difficult. If you imagine this line, you only get to see what's left of the line. So is that the top? Is that spike there the top?
Yeah.
Or is that spike there? Or is that? So
Yeah.
so I have some sort of mental hard numbers that I use. So if I see 70% implied volatility on 1 week Bitcoin options, I'm thinking we're in degen 2022 territory or 2021 territory at that level. And that isn't appropriate for current markets. So for me, that's a glaring signal that people are mispricing risk. And for me, I've got this hard number of about plus or minus 20% on the 10 delta risk reversals. That's my sort of just. I haven't actually backtested this with quantitatively, but qualitatively, that's my signal that people are being too fearful or too greedy.
And people can use RSI in a very similar way. When it just gets grossly overbought or oversold, then you can maybe that's where you start nibbling. And the real fear is, hey, these market events don't happen that often, and you'll get some weakness. How do you know it's going to be one of those market events? You don't, right? So many times you see the market come down and be trading the NASDAQ or something, and it's just falling, 60 handles, 100 handles, 200 handles. I'm like, oh, do I dare nibble here? And you don't. You're like, no, this could be a big one. Boom, it goes up 100. You think, oh, geez. So it's not an easy decision. It's easy to look back at charts after stuff happened and say, oh, I'll just buy here, dummy.
Yeah.
But like you said, how did you know that this is, maybe this would have went up to here?
Yeah.
We don't know, right?
Well, and had we sold down to 75, it could easily have gone to like 90% vol.
Yeah.
Yeah.
And that's where you start to nibble. Maybe you don't commit your full load and say, okay, I'll buy some here at 82 or 83, whatever the price was. If it goes to 80, I'll buy some more. If it goes to 78, I'll buy some more.
Yeah.
And you can say, look, I can ladder this all the way down to 70,000 if I need to.
Yeah,
that's a better way to go.
No, but I do have this internal rule of I'm happy to sell 60% volatility all day long because I know I can always get out of trouble in my options books. So 60 vol is a kind of a signal that markets are kind of tradable. But yeah, you're looking for multiple signs of stress.
Yeah. One thing I wanted to do, excuse me, was look on a daily chart.
Okay.
Because, that's kind of interesting, isn't it? So we're back here in April, where we had kind of a couple of wicks down, and then a real big wick down, third one, and completely rejection it, and then off to the races we went. And look, we dug deep into that territory. We didn't hit the bottoms of it. That's why a lot of people are saying, well, 75, because that's where the bottom wicks go, but it didn't quite get down there. So if you thought that, oh, this is the bottom, this is the bottom, this is the bottom, you had to be prepared for it to go down to 75. There's nothing that said it couldn't have broken that. Because nobody really knew what was going on in behind the scenes. Maybe NVIDIA is going to collapse and the whole U.S. economy is going to collapse. Who knows, right? But
I mean, it will, but just not yet.
but look at the volume profile, eh?
Yeah.
So I think this is the largest liquidation in history. Was
it? Yeah, it could be.
I can't remember. Was that one or this one?
I think this
was the big one.
That mega wick was a big one, certainly.
I don't know if this one was bigger, but I know a lot of people got hurt, and I sure hope anyone listening didn't get beaten up too bad, but it happens. Yeah. And as long as your account survived, you can recover.
Yeah, I mean, we lost a bit of money on that second wick down. Funny enough, in our fund, we didn't lose any money on the first wick down. It was actually in the aftershocks that we lost a bit of money. Yeah, and it's funny how that happens. Mm-hmm. But we're making it back pretty quick, so we're happy with that.
So let's look at this chart. Here's an hourly chart. So here's all the drama, right? But is it more drama than here? Is it more drama than here?
It's funny, isn't it?
Or here? Yeah. Or here? Or here? Or here?
Yeah. Yeah.
It's on average, this happens around every 3 or 4 months.
Right.
So if you're not over leveraged and you've got a long-term plan and you thought, oh, this is the bottom, I buy a lot of it. Oh, geez, that's crazy move. This is the bottom. Geez, I bought a little bit more here. Well, now it's back up to your average price.
Yeah.
If you've got some patience and you're not over leveraged. How many times have I said over leveraged? About 5. It's kind of important, right? Because that'll kill you. Now, if you're just in and out, you're going to be fast and you want to go 10x or a gazillion x, great, do it. But you've got your risk parameters in place.
Yeah.
So it's going to stop you out. You know how much you're going to lose. It's not going to wipe you out. You live to fight another day.
Yeah.
What?
Definitely, you've got to have your exit positions, and if you either with stop loss or with a mental stop loss, you've got to know when it's time to go.
Yeah, or you're hedging your position with options or something like that.
Yeah.
But right now, gravity doesn't have that ability, so we'll just talk about futures. So here. So is it unreasonable for this to get up to 95 or 100 or 102 or 100? Of course not. Look at this chart.
Yes.
It looks. It might take 2 weeks. It might take 2 months. Who knows?
Yeah.
Completely reasonable. So if we get a pull back down to here, it's really nothing in the big picture. And sometimes when you get freaked out when you're trading, zoom out, look left,
Yeah.
and see what's going on over here and saying, okay, in the big picture. Now gravity doesn't have more information because, oh, hang on.
They're fairly new, aren't they? They've got...
Go to a 4-hour chart.
Yeah.
Yeah. So here's where they started. But look, there's no reason we can't get back up to these levels up here. If you want to hold, again, it might take weeks or months.
Yeah.
That can make you a lot of money. And if you want to kind of scalp in between, great. Go ahead and do so. And this could have been the opportunity of a lifetime. People were saying it might be. We had these tweets by Eric Trump saying that, oh my God, Q4 is going to be crazy, and is he right? Does he know something? I don't. Maybe. Who knows? But I guarantee he knows a lot more than we do in terms of inside information.
I'd be happier if it was Barron Trump saying it.
Yeah. I think he's a smart kid. I think he's going to be president someday. But here we are. So what's my personal strategy going forward? If it wants to rip up, well, I've got some options I'll have to adjust. But I probably won't be pounding long at these points. I'll wait till we get a capitulation, and I'll short it, wait for it to come down. Yeah. If we come down, which I kind of have expected to do, I'm happy to buy it and sell it, and buy it and sell it. Yeah. And if this is the new range for a while, then so be it. If it busts up and then this is the new range for a while, so be it. But I'm going to remain net long, even if it's very small, while it stays in this area. If it wants to go up here, I'll probably take it short. If it pulls back, then I'll start to get long and change my position to a long bias. When I play the range on Bitcoin, I'm only trading it long. So right. So if it's stuck in a range, so let's just say this is the range here, I'm not buying it and then shorting it and buying it and shorting it. I'm buying it and selling it, right. Waiting to buy it and then selling it, waiting to buy it, selling it. And hopefully, and sometimes I'll keep some extra just in case it does 2 or 3 or 5 grand on the upside. Great. Other times, it just doesn't work out that way. But that's how I'm looking at it going forward over the next, over the next week is.
And I think
what I'm thinking.
We're saying that so today's a US market holiday, so Bitcoin's going to do its own thing, and whatever it does is irrelevant. And then you'll get the so tomorrow is the half day session in the US markets. So there'll be a bunch of volatility around that. So if you were thinking of taking a position in Bitcoin and you were flat, if you're thinking of taking a position in anything and you're currently flat, it might be better to wait till Monday, just to let the Thanksgiving thing pass,
or see what happens tomorrow, because maybe there'll be a big move tomorrow.
Right. Yeah.
Depending what happens. But we've got. It could end up being basically 4 days of flatness for Bitcoin, or small moves because the U.S. won't be as active. Or wait until Sunday night, of course, when Asia comes on and they might start to move the price.
Yeah, you do tend to see a lot of front running of the US markets on a Sunday. So, and in fact, all the big moves in Bitcoin this year have started on a Sunday. Sometimes on a Saturday, and then get confirmed on the Sunday. So if I see strength continuing through a Sunday, then I actually tend to buy the market because it kind of Bitcoin somehow front runs the Wall Street and it feeds back on itself. Right?
Yeah, and that's one thing we've been looking at. It can be the canary in the coal mine. It can front run. It doesn't always,
Yeah,
but it definitely can, especially when the U.S. is inactive
right.
and you see Bitcoin doing something. It's like, what's going on?
Yeah,
If you see Bitcoin ripping and the U.S. markets are doing nothing, well, you might want to get long the U.S. markets to follow Bitcoin. And the same thing when it's weak, and vice versa.
Yeah.
If the U.S. markets are really doing something, but Bitcoin's flat, it's probably going to play catch up at some point. So they do trade positions in terms of who leads and who follows.
yeah.
But it's become an interesting asset. You know, Bitcoin didn't act like that 4 years ago
No.
or 5 years ago. It was quite different. I mean, it did have a loose correlation, but sometimes. But as it's been brought into the system.
Yeah, no, the whole style of trading Bitcoin has changed this year. We speak to a lot of other trading teams and a lot of other funds and fund managers, and actually quite a few of them went out of business this year because Bitcoin just suddenly stopped being Bitcoin.
Yeah,
it started trading like something else, like a Russell 2000 or something.
Yeah,
and crypto people were just not used to it.
Yeah.
Yeah.
One thing we'll do just before we sign off, let's get a quick look at our old nemesis,
Ethereum. Well, you know.
So where did it get down to? Around 20,
28, yeah, 27.
26.
Yeah.
Excuse me. I don't know. I didn't get involved. There's enough drama in Bitcoin for me to.
Yeah.
But I know some people love Ethereum. They trade Ethereum a lot, and that's cool.
You get massive divergences of opinion over Ethereum because you get people who are saying it's like $1,000 and people who say it's worth $10,000.
Yeah.
And
it had the same amount of drop, around 13% from when we did our. So it basically followed Bitcoin.
Yeah, I think in the absence of any counter narrative, essentially all large cap cryptos are the same in the same market. Right?
Yeah, there are some altcoins that we trade as part of a different business for different reasons we don't want to get into here, but they remain pretty flat.
Yeah,
they're still kind of depressed. And
retail doesn't have any money.
Yeah,
end story, right? Until they start dropping money from helicopters in the US,
which is probably coming.
That's coming, but not yet. Yeah. We're over time, by the way.
Oh, hey, what happened to the dividend? Everybody's going to get a $2,000 check from Trump. Was that still? I haven't heard about that.
Well, it's all gone super quiet, isn't it?
Yeah, suspicious. All right, hey, let's shut it down. We've kept you guys long enough. I hope that helped. We've got our trading plan for the week. Hopefully, you have yours. Remember, keep your leverage tight. If you want to go long, make sure you can afford it. And let's see what this week's brings us. Catch you next week.